in 2025, where do we actually stand, guys? How do you think? Because real world assets on chain are not science fiction anymore, and also not fully Wall Street on blockchain yet. We kind of in that awkward teenager phase where things work, but not at full scale of full trust. Roman, what do you think? PIPO?
Yeah. Actually, I do believe that RWA, uh, in the last year, we saw rapidly growth, and just in my opinion, like market is absolutely changing since Donald Trump came to power, and there are actually new ability and new field absolutely open for fintech companies that was actually closed before. We saw many times how many projects such as for example ton was absolutely wrapped, and many other cool ideas like Binance wanted to list RWA projects and make tokenized assets available to the whole type of investors. This initiative also was wrapped up, so we see that all conditions absolutely changing. So I do believe that in the next couple of years we will see something absolutely incredible. Like crypto won't be like maybe not crypto. It will be like daily based assets such as gold or I don't know or cash. Yeah.
Totally. I think that that framing actually captures where 2025 really was, because it feels like something kind of a door is opening. And since the Trump returned to office, markets definitely shifted tone, especially in the US, with more openness toward digital assets and tokenized products getting less automatic skepticism than before. I think that meme coins kind of spoiled the whole perfume of crypto. But I think that the interesting part is that institutional players are no longer asking if this works, but not how controlled can we make it, which is a big psychological shift too. Still, I think that we're not a full institutional scale yet because most banks and asset managers are running parallel systems instead of fully merging them into one pipeline. Roman, um, what do you think?
Yeah, I have like kind of like two different point of views. The first one is from the market making side. I can clearly state that there are tons of different projects currently building on top of RWA, and they are trying to shift an approach for crypto projects coming from the initial stage of crypto industry toward the real world assets, and where the interest is actually in the market for the community and retail users. And the second way I'm currently looking at the current landscape is from the trading activity, because most of the time I just build something for trading and do trade by myself. So the point of view here is that we are in the quite interesting stage where, for example, HIP3 program on Hyperliquid allows various players to list proxy on real world assets in the form of perpetual futures markets on top of Hyperliquid. And this attracts a lot of users to trade on these markets and becomes a real uh, nice reference point for the actual price of these assets. at the moment. So I guess we are only at the beginning, but the beginning is quite good at the moment here.
Yeah, true. I agree here as well. I think that from a liquidity perspective, it actually reminds me of how early DeFi evolved, where products came first and proper pricing infrastructure came later, not the other way around. And your point about HFT strategies on platforms like Hyperliquid using proxy perpetuals for RWA exposure is super interesting because I think it shows demand for synthetic access is already real. It kind of bridges the gap for users who want exposure but don't want to deal with slow traditional settlement or custody friction. And I think that we'll also see in some reports that derivatives volume in crypto is often like 5 to 10 times higher than spot, which tells you where liquidity naturally wants to live. So yeah, I agree with you. We're not just like tokenizing assets anymore. We're already building trading layers on top of them, even before the base layer is fully mature, which is a bit chaotic, but also very now, I would say. But how do you think which asset classes tokenize best and why? Because I think that there are a lot of liquid assets, right? And it is incredibly hard to find buys on secondary markets, or it's hard from regulatory perspective. Roman, what do you think? I'm not sure there are two Ramons, so Roman from PIPO.
Yeah, you can call me Roman D. Yeah. Yeah. So which assets? Actually, we saw like real estate came on the market since 2017. I saw many projects like that, and the main problem here, what the best assets let's say fits there, they should have some type of equity rights, because if, for example, I launch a project and say like, guys, I'll offer you real estate shares, who will have a right on this real estate? There should be someone, right? So and you have only tokens. I have a right on this equity, and you have only tokens. In real world, that it doesn't work in real world. There should be a real legal structure for that, for such type of assets. And I cannot say exactly what the best type of assets will fit for anyone, but you should decide what best fits for you, especially like real estate. Okay, it's not absolutely let's say finished this legal part. Yeah, commodities, they are a bit, let's say, different option, but they're more, let's say, more tokenized than real estate, like bonds, or I don't know, some gas, oil features. They are also linked to tokenization, and they have more legal equity parts. And here we can also can also see what's beyond these pre-IPO equity rights. They, as I mentioned, like once Donald Trump came, their field absolutely changing. Uh, just take a look at the Cerebra. Yeah, how it calls. Cerebra's IPO. Yeah, that was recently launched on Nasdaq and Hyperliquid. They started at the price $300 price, so it increased much more than any type of such assets. So, in my opinion, my own opinion, I see future only for the pre-IPO and some type of commodities. I don't. Personally, I don't believe in real estate. In real estate tokenization, but such as commodities and tokenized assets, tokenized shares, they might have a good future because we have such legal structure for that. Yeah.
Interesting points I can hear. Well, we saw the wave of real estate tokenization around 9 years ago, where real estate tokenization was everywhere, but a lot of it ran into the same wall. Legal ownership is not just a smart contract problem, right? It's a law problem. And if you don't clearly define who actually owns the equity, then the token is basically just a fancy receipt, and markets don't like ambiguity for long. That's why more standardized instruments like bonds, treasury products, and money market funds tend to tokenize better. I personally voting for money market funds, to be honest, because they're simple, stable, and already digital and TradFi. So moving them on chain is not too painful. Maybe credit and private debt also work surprisingly well, because institutions really like structured products with clear rules. Real estate is popular in marketing, but in reality, it is messy because every building has its own legal story, etc. Commodities are also interesting, but storage and verification still make people slightly nervous, I think. But very good, sharp observation, and I get why Cerebra's IPO moment sticks in your head, because when you see something like a Nasdaq listing starting around $300 and then rapidly higher than most traditional assets, it kind of reminds you that capital still loves story plus scarcity plus hype more than anything else, and pre-IPO feels like the most natural fit for tokenization too. So wonderful point. Roman, what do you think?
Yeah. So I guess I'm 100% agree about pre-IPO, but this mostly about the future for RWA assets. Speaking about which types of assets are the best one to be tokenized at the moment, I guess that at the beginning you always should start with the easiest form in order to gain the traction and to figure out if there's users attention to this matter or not. And I guess the best ones are here, like stocks in different form. At the moment, we just have it at the form of trading activities. Maybe later we will have it in the form of something like store of value when more uh, companies will tokenize and distribute, whereas classic companies to on chain through spot markets and commodities as well. I'm not sure if we are ready yet for real estate or different bond structures, since they're way more complicated in different forms, in legal forms, in forms of understanding by users, by community, retail users, and even institutionals. So I guess we should start with start low here with stocks and commodities that are easy to to understand and to move forward and check if there's something interesting.
Yeah, true. I mean, starting with the easiest form like stocks makes a lot of sense because people already understand them and price discovery is very clear. I think that the way we're already seeing platforms experiment with tokenized equities and global equity markets are massive with over like $100 trillion in total value. So even small on-chain adoption there matters a lot. But I think that the key advantage that users don't need to learn a new story. They already know what a stock is, so adoption friction drops immediately. And yeah, real estate and bonds still feel heavy because you need legal clarity and jurisdiction alignment, as Roman D said, and people actually trusting the structure behind the token. So yeah, I'd say that smart path is exactly what you said. Start simple, test attention with familiar assets, and only then slowly move into the complex, legally no like real estate and maybe structured credit. But also, I'm interested, Roman, from Origami Tech perspective, what share of your trading volume today comes from tokenized assets, and how has this changed over the past 2 years?
I wouldn't say about like 2 years since we are only 1 year old project, but for the last year, we can see a quite significant increasement of the share in trading volumes for tokenized assets and RWA assets on our platform. Especially, this is coming mostly from hyperliquid HIP3 listed markets that are dedicated to various indexes and stocks, derivatives to real world assets. So we are considering this share actually to grow, looking into the future, since we don't understand at the moment that current 10 top 10 pairs on Hyperliquid especially are mostly fulfilled by RWA assets at the moment, and only 3 crypto native projects are highlighted in the top 10. So I guess we are here in the right moment of time with that discussion, and this share will only grow. But I have a question for you actually. How to bring TradFi and DeFi in practice here, speaking about RWA assets from your perspective, Pauli.
Can you repeat, please? Because I missed the beginning of the question.
Yeah, the question is how to bring TradFi and DeFi in practice.
Oof. It is a very I can give a very long answer to that question because it's a it's an ever evolving challenge, but the only real bridge between TradFi and DeFi is regulated wrappers. I think you can't just plug a bank into a smart contract and hope it behaves nicely like a crypto wallet. In practice, you need licensed entities sitting in the middle, handling custody, reporting, compliance, etc. I'm personally speaking with different banks right now, and they're just not ready to trade any kind of assets of their clients on a public blockchain. That's why we have these trade-offs, because DeFi is all about permissionless environment. Everything is open for everyone. It's like the internet started. The idea of the starting the internet, how many, 30 years ago, 26 years ago? Not currently, I'm not really sure. But anyways, it's incredibly hard. Nobody is really diving into that except BlackRock, JP Morgan, Morgan Stanley, maybe. But also another thing is the infrastructure also has to speak to both languages, right? TradFi talks is in Swift messages, custodians, and settlement cycles, while DeFi talks in wallets and smart contracts and instant finality. So most real systems today look like hybrids, and there is no pure DeFi anymore if we're bringing TradFi on chain, where a regulated entity mirrors assets on chain instead of fully replacing the old system. So there are a lot of compromises, and the real compromise is simple but a bit painful as well. You lose some decentralization to gain legitimacy, and you lose some UX purity to gain regulatory access as well. So honestly, maybe the most successful projects right now are not the pure DeFi or pure TradFi ones, but the awkward hybrids sitting in the middle to make both sides slightly uncomfortable, which is usually where real adoption starts. It's like a marriage. You never know. You're always going for compromises, right? Roman D, I'm interested from a PIPO perspective. What's your real edge right now in the pre-IPO RWA game?
Uh, yeah. So regarding the pre-IPO, just let me paint picture here. Yeah. So, like, let's say, like Stripe, when Stripe went to the public in 2025, it got maybe around 13 years in private, and during that they did around 50 times since their the pre-IPO stage. And here uh, like uh, we target to the market that was closed for the all investors, for the all users. It's even much better than invest in some meme coins, or I don't know, uh, to try to save to try to catch knives on the market, because here it's absolutely legal structure. And like you don't need to have six six number checks tickets, sorry, tickets, and you no need to have a right passport to enter in such deals. So the pre-IPO absolutely changing market. So we can see that for now we can overview that. I expect that Kraken and SpaceX IPO, they absolutely change the market. So we will see more liquidity on the crypto market, because as Roman mentioned regarding Hyperliquid, they already integrated in many services, and they do provide the big amount of liquidity that crypto market never seen before that. So I absolutely agree that this niche can uh, overthrow, let's say, the current market, crypto market, and absolutely change the whole rules that we saw before that. So here we have right niche that we took, and I hope that uh, for the users we will open right gates, so it will be more accessible for everyone. Yeah, thank you for the question.
Wonderful. Look, Roman, to be honest, when we first got into the same panel on Select Labs, I was pretty amazed and surprised that this concept is actually existing. Tokenizing like pre-IPO was like what? So this was very interesting to me as well. And you have a pretty strong point and touching on something that the market is only slowly waking up to. And you woke up me several weeks ago. The pre-IPO space is basically where all the real action happens now. I realized because companies can stay private for like 10, 15 years and still grow massively before public markets even see them. Your Stripe example is perfect as well. If a company grows even 30x in private markets before listing, then the IPO moment is almost like late exit party, not the real value creation moment anymore. And that's why I think that pre-IPO RWA products feel so powerful, because they gave access to that growth phase where most of the upside actually happens. And we already seen private market liquidity estimates go over $10 trillion global, and maybe even more. So even a small tokenized slice of that becomes a huge for crypto flows. And I agree with your point about names like SpaceX or even platforms like Kraken potentially reshaping sentiment. Let's see. But I think that the real edge here is not just access to pre-IPO assets, it's also owning the narrative and the liquidity layer before those companies ever hit the public stage. uh, I hope that PIPO will lead this narrative as well. But maybe we can also talk about the future. Not sure if I would love to skip the regulation question, to be honest, because I'm
Agree.
not a yeah I'm not per se a professional in that sphere. I have friends, but and I'm constantly reading all the reports, so we can talk about Clarity Act. But I would talk more about the future, for example. Um, in 3 to 5 years, will it be mass adoption already or still niche? What's kind of a trigger should be here that will unlock this explosive growth for tokenized real assets? Let's Roman from Origami Tech. You can be
I'm
first.
here. So I guess we will see a continuous growth of trading volumes on the centralized venues and centralized ones for RWA assets uh, in terms of trading volume. And I guess actually that while being trading on crypto markets, the real world assets will have these markets as a place for price discovery, and there is the real source of real price for these types of assets, because it makes mm, way easier for users to trade on these types of markets than, for example, on Nasdaq or any other centralized classic type of the venue itself. And speaking about the not trading side of RWA assets, but I actually think that it's one of the most important for its mass adoption. I guess we will have more regulation base for more specific cases like real estate assets being tokenized properly, and everything is being verifiable on chain in terms of owning any type of asset from the real world assets. And we can see a lot of, at the moment, projects who are already working on it and who are already working with different classic companies in order to provide them with an infrastructure to firstly track their activities on chain, and then maybe to become a layer for them to store information and exchange maybe some value on chain. For example, you can take a look at Canton and understand that it's also just the very beginning for this project and for this type of tokenization, for because information also can be considered to be tokenized when it becomes verifiable on chain while not being disclosed publicly. So I guess there's still a room for us to grow in terms of complexity of structures and adoption, uh, leading to increasement of trading volumes on chain and off chain for RWA assets. Thank you.
Solid. Roman D, what do you say?
Well, I can say that this question is kind of more complicated, but just let me think in that way. Like 10 years ago, for example, if you want to invest in a company or just invest in any tokenized asset, so it was absolutely impossible. And you need to have a bank account, you should pass not only KYC, you should submit and apply many bureaucracy documents, and it was really difficult. So just what we see now, like if for example he was born in Africa, and you have only a mobile phone, so you just need to have access on internet, on web, and you can buy any tokenized gold, or you can so you can buy anything, like not only Bitcoin as it was 10 years ago. So for now you can get digital metal as a palladium, or I don't know, gold, silver, anything you want. And what we will see in next 10 years, that's actually is very interesting, because as a answered in the previous question, like we won't say like tokenization. So we just say I want to buy gold. We won't say like I want to buy digital gold. It will be same. So it will be on the daily basis. Shopping, let's say. So that would be absolutely normal process. Instead, what we see now, uh, that is what I see from my point of view, and how it will be in next in our near future.
I agree with both of you. When I was interviewing CEO of Maverick, he said that we used to call songs MP3s, right? And same as we're doing right now, we're calling real world asset tokenization RWAs. Now we not saying, can you send me an MP3? I love this song on Spotify. Same will be in the next 10 years. We will be just saying the name of the asset maybe, or something else. So yes, 10 years ago, investing felt like a serious appointment. You needed the bank, you needed the paperwork, sometimes even physical meetings, like you were applying for a small loan just to buy stock. And now it's almost funny because you just need a mobile phone. You can buy Bitcoin, ETF, or even fractional shares in seconds, which wouldn't be sounded like science fiction, which, yeah, like science fiction before. And in terms of 10 years from now, we already see early signals with global retail trading accounts growing into hundreds of millions, and most of them being mobile first users who expect instant access. So I think that the idea of buying tokenized gold or other assets as casually as ordering food doesn't feel crazy anymore, especially maybe in mm, very proactive countries or regions like UAE or Switzerland or Singapore, somewhere where regulation is already have rule books. Basically, this week Vara created a new rule book for stablecoins, as far as I remember, but I might be wrong. So yeah, I think it's a natural next UI upgrade of finance. Even I would call it like that. And I think that we're going into the slides out of time on air. So maybe the last part of our today's discussion will be one piece of advice, what to focus on RWA right now. Roman from Origami Tech.
Yeah, first of all, thank you so much for these examples, reminding how fast time passes. So we can understand that everything is just evolving extremely fast. And speaking about what to focus on, I guess Roman D has already mentioned the most hot topic that currently exists in the industry at the moment. So that's the trading activity on pre-IPO companies that are going to be listed on Nasdaq on or any other central. Sorry, I just can't avoid this word, like centralized. Speaking about exchanges that are going to be listed on exchanges. So I guess it will be the new meta for the next year. And it should be studied by everyone who is curious about RWAs, trading on decentralized venues, and etc. So I guess that's it. from my point of view.
Awesome. And Roman D?
Yeah, I just here fully support Roman too, because without liquidity from the stock market, it will be difficult to grow rapidly. And as I mentioned, what we saw, these cerebras, uh, like on Nasdaq, there was just let me how many yeah. Yesterday, just let me read that. Yesterday, on the Nasdaq, the volume of pre-market was $30 million instead of just sit down. 230 million for the one day on hyperliquid. So you see like comparison between Nasdaq and hyperliquid. So it's that I was talking about
The
exactly.
price discovery is happening on chain, right?
Yeah, yeah, and it's absolutely on chain. Yeah, yeah.
Yeah, well, exciting times, and maybe from my point of standing, I would say stop focusing on tokenization and start focusing on distribution. Because many builders think that the hard part is putting assets on chain, but that part is already getting solved. And I think that the real battle is getting regulated capital and real users to actually use the system daily. I mean, Roman, you said a perfect example that people already using it, but not in enough way, I would say. So yeah, maybe boring, but it should be scalable, because in RWA, boring is usually what survives audits and stress tests, etc. So yeah, the winners will not look like crypto startups. They will look like financial infrastructure companies with better UI. Yeah, that's it from my side. Thank you guys. Thank you everyone.
Thank you so
Yeah.
much for the moderation.
Thank you so much.
Thank you.
Thank
And
you.
thanks everyone for listening. It was a pleasure to be here.
Yep. Thank you guys. See you soon. Ciao ciao.
Yes.
Have a good day.
Thank you for the MA. Bye bye.